In Arkansas, $1 billion harvest is left to rot as math turns catastrophic. Farmers pay $500 a day just in diesel, yet lose $850 for every acre of soybeans they plant. 30,000 acres in Craighead County still sit underwater. The governor scrambles for solutions, but with bankruptcies doubling and families abandoning generations-old farms, are we witnessing not just a statewide collapse, but the unraveling of America's agricultural heartland? The answer starts with the impossible numbers farmers faced before disaster even struck. Joe Christian stands at the edge of a flooded field, invoice folder in hand, watching diesel exhaust drift over waterlogged rows. Every morning begins with a decision: run the engines or let the field sit idle. On paper, the numbers are relentless. 30,000 acres of ground, each one a liability as costs keep climbing. The combine alone burns through $500 in diesel every day, whether it moves 10 feet or 10 miles. Seed and fertilizer invoices stack up on the kitchen table, each one a reminder that the bills do not care if the weather cooperates. The bank's operating loan worksheet sits beside them, columns of numbers outlining what it will take just to break even, if that is even possible this year. Joe's operation is too big to pivot overnight, too invested to walk away. He checks the price of rice and soybeans on his phone, sighs, and does the math again. The cost of running a combine now rivals what the grain will bring at the elevator. Every pass across the field is a gamble. Spend money to lose money, or let the crop rot and hope next year is different. He is not alone. Across Craighead County, farmers face the same impossible calculus, weighing every dollar of diesel and every line of credit against a market that no longer adds up. The stress is not just on the bottom line. It is in every conversation at the feed store, every late night look at the ledger. For Joe, the numbers are not abstract. They are the difference between keeping the farm afloat and losing everything built over generations. Every line in the ledger tells a story of shrinking margins and mounting pressure. The cost of labor across Arkansas agriculture reached $413 million in 2025, up 9% from just 4 years prior. Fertilizer and seed prices have climbed steadily since 2020, outpacing any gains in crop value. Interest on operating loans is now a heavy burden, with rates rising sharply since 2022. For many, it is an extra $100 per acre just to put a crop in the ground, compared to what it cost a few seasons ago. Commodity prices offer no relief. Rice prices have dropped 40% from last year, while soybeans have sunk to their lowest levels since 2020. Corn trades at $410 cash, barely enough to cover diesel, let alone land payments or repairs. Even when yields are strong, the math stays negative. University of Arkansas economists calculate average losses of $258.84 per acre on rice, $352.75 per acre on cotton, $273.71 per acre on corn, and $85.02 per acre on soybeans. These are not projections. They are the numbers farmers see when they tally their own books. Running equipment has become a losing proposition. A new combine costs $800,000, a tractor $400,000, and a single tire can run $5,000. Fuel alone drains $500 a day from the account. On a 3,000-acre operation, what once required a $500,000 annual loan now demands 4 times that amount, just to keep up with input costs. Land values, once a source of security, have softened, leaving less collateral to borrow against. The ledger does not lie. Each dollar spent is a dollar at risk, and every decision comes with the weight of knowing the numbers may never add up again. Rain began falling before dawn on April 12, 2025, and by nightfall, fields across the Arkansas Delta were already saturated. Over the next 4 days, NOAA rain gauges recorded local totals of 6 to 10 inches, with isolated spots reporting even higher. The Cache, Black, and White rivers all reached flood stage in rapid succession. In Jackson County, the Cache River crested first, pushing water over its banks and into low-lying farmland. By April 14th, the White River at Augusta and the Black River near Black Rock were spilling into nearby fields, compounding the disaster. Levee districts scrambled as water pressure mounted. On April 15th, the first levee breach was reported near Grubbs. Within 24 hours, local levee officials counted 4 more failures along the Cache, each breach sending torrents across thousands of acres. By April 16th, floodwaters pooled behind broken levees and blocked drainage ditches, trapping water for miles in every direction. Satellite imagery from USGS and NASA showed broad swaths of cropland transformed into temporary lakes. With rivers still running high, pumps sat idle and roads disappeared underwater. The deluge left entire counties cut off from their fields, the scope of acreage loss growing with every hour the water refused to recede. Harrison Jones stands in the mud at the edge of his rice field, boots sinking into ground that hasn't dried since April. He points to the water line on the barn siding, a pale scar above knee height. The flood swallowed 600 acres of planted rice, wiping out the season before the seedlings had a chance. Next door, the Isbell family faced a different calculation. With 1,500 acres too wet to touch, their planters never left the shed. Seed bought on credit sits in unopened bags, fertilizer paid for but never spread. 8 months after the levee failed, the water still hasn't fully drained. The fields are green with weeds, not crops. Extension agents document field after field where tractors haven't moved since spring. For the Jones and Isbell families, the numbers are personal. Thousands of acres lost to water, whole sections of land written off for the year. The losses aren't just measured in dollars. They are visible in the empty rows, the rusting equipment, and the silence where harvest crews should be working. The ground itself feels changed, saturated and compacted, unwilling to support even the first step toward recovery. Legal documents pile up as fast as the invoices. On one side, insurance claim packets show the gap that no policy can fill. The April floods left $78.9 million in crop damage across Arkansas, but only $18.69 million reached farmers through indemnity checks. For those who bought seed, fertilizer, and diesel before the water rose, prevented planting insurance covered barely 60% of what was already spent. The rest became a personal debt, numbers that no adjuster could erase. In bankruptcy court, attorney Joel Hargis sorts through a caseload he calls staggering. Chapter 12. Farm bankruptcies in Arkansas have nearly doubled, rising from 45 in the first quarter of 2024 to 88 in the same period of 2025. Each file tells the story of a farm forced to liquidate, a family's name erased from the land. Auctioneer Kirk Witcher's calendar fills with weekly sales, each one a public end to private struggle. In Newport, a 6th-generation farm changes hands in a single morning. The weight of these losses is measured not just in acres, but in lives. One equipment dealer quietly counts 5 customer suicides in just over a year. The numbers on the docket are more than statistics. They are the last entries in ledgers that once promised a future. Tractor lots across Arkansas sit quiet, rows of unsold equipment gathering dust. Dealers report tractor sales down 13%, and combined sales have fallen nearly 50% compared to last year. For many operations, the math is simple: no cash flow, no upgrades. The ripple spreads beyond machinery. Farm supply stores close their doors, and banks tighten lending, wary of rising risk. Equipment that once cycled through auctions now lingers, with few buyers left to bid. Meanwhile, crops rot in the fields. University extension studies estimate that more than 3/4 of unharvested produce remains edible, But market prices and labor costs make harvest impossible. In rice, satellite data points to an 18% loss in yield from in-field rot alone. One farm left 18,000 pounds of squash per acre uncollected, while in Tennessee, researchers measured over 2,000 pounds of edible tomatoes per acre left behind. Legal barriers and liability insurance block volunteers from salvaging what is left, turning nutritious food into waste. The economic impact stretches far beyond the farm gate. USDA export data show that trade disputes have redirected Chinese soybean purchases to Brazil, shrinking Arkansas overseas markets. Analysts warn that cash receipts for Arkansas agriculture could drop by more than $600 million in 2025. Joe Mincer, a regional policy expert, projects that without decisive action, 1/3 of the state's farms could close by spring. The numbers are stark, and the consequences threaten to reach every corner of rural Arkansas. Right now, Arkansas's fields stand as stark evidence that economic forces can devastate not just crops, but entire communities. As farm bankruptcies double and food rots unharvested, rural futures hang in the balance. When a region's roots are pulled up, the nation feels the aftershock. What happens next matters to us all.